Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And Deutsche Bank is in some tough times, as they should be. A long time of criminal activity and fraud. You'd think karma would bring them down by now, but they actually went down as we record this, as of today, 4.8% just in the past day. But as this Reuters article says, Deutsche Bank looks to cut 10,000 jobs to reduce costs. And as the article goes into, Deutsche Bank plans to cut 10,000 jobs, or about a tenth of its global workforce, as part of efforts to reduce costs, a person with knowledge of the matter said on Wednesday. The German bank's supervisory board met on Wednesday evening to talk about job cuts and other details of a broad restructuring plan ahead of the company's annual general meeting on Thursday. Deutsche Bank declined to comment. The Wall Street Journal first reported the job cuts on Wednesday, adding they were likely to extend into 2019. And Deutsche Bank is part of a quote-unquote restructuring plan right now. And I find this kind of funny because, people are kind of taking it lightly. This is nothing to take lightly. The idea that Deutsche Bank is cutting 1 in 10 workers. They are obviously dealing with some huge issues. And as we went into as far back as January and February 2016, Deutsche Bank had at that time a derivative exposure of $75 trillion about the global yearly GDP, which is just totally insane. And how they've managed their way around that, well, I guess that just comes down to more centralization, manipulation, the usual kind of nonsense when it comes to these big banks. They are powered on debt and manipulation, so I mean, it's no surprise. But John, can you go into the story a bit?
Yeah, well, Deutsche Bank, has been a sore in Germany for a very long time. Germany's two major banks, Commerzbank and Deutsche Bank, has really been struggling ever since 2008. And if you look at the share price on a historical scale, you can see it peaked out at about 90 euros back in 2008. So what you can see now is, of course, now the share price is at 10. So that means that it's dropped almost 80%. The share price was a terrible investment to put any bet on Deutsche Bank since then. And of course, they've been not going up whatsoever. If you look at the share price, it's constantly been going down in share price. That means that they're in huge trouble. And of course, I think the big problem is that they have Commerzbank and Deutsche Bank is such major banks in Germany that like a bailout scenario or a bail-in where they merge the bank, like maybe to Commerzbank, that's not going to really work because you're having such tremendous, like it's currently I heard from Martin Armstrong, it's about 40-something trillion dollars on their derivatives books. That's down 30 trillion, but there's still a mass amount of derivatives on their book.
Well, I wanted to quickly mention, of course, we've talked about Deutsche Bank many times before, including the fact that they have been caught red-handed, manipulating and attacking the gold and silver markets alongside other banks like HSBC, Scotiabank, PNB Paribas, the list goes on. But I have to ask, John, do you think that this might just be justice at last, or are they going to get themselves out of this mess and, manipulate themselves further into temporary prosperity and long-term problems?
Well, I think over time you're going to see Deutsche Bank for sure fail. This time, you got to remember what's happening right now. It's a massive debt crisis worldwide. We racked up massive amounts of debt. It's not just the United States. The United States is, not that bad compared to a lot of other places around the world. And this debt is, on a substantial scale, both government debt and private debt. Like we've just been on a heroin binge, if her debt was heroin, and now we're kind of waking up. We're found in the monetary ditch, and they're trying to get us back to life, but it's not possible because you're basically overdosed on 50 tons of heroin. If you look at, compared to the monetary heroin that they shoved into the market, so it's very bad what has happened to, all the banks, especially the European banks are really struggling now because they've been borrowing out money to a lot of the states like Italy and Spain, Greece, Ireland, and Portugal, all the pigs countries as they call them. If you look at, for example, on Deutsche Bank, they had a low right at the start of the year Their credit default swap was 65.50 basis points. But now it's currently at 129. That's that's basically doubling, Josh, of risk in over a 5-year term. This is the 5-year credit default swap, which is an insurance that everybody can insure themselves against Deutsche Bank's default, which is insane.
I like how we're on the site Borsorama and its partners Edmund de Rothschild. Anyway, it's
European, right?
Yeah, it's funny. But when it comes down to it, as we go into so often, if your money's in the bank, it's not yours, it's the bank's. And people, in my opinion, should be steering completely clear of the banking system. The banking system is completely insolvent. It never changed from 2008. It's only gotten worse via the hand of more centralization, more manipulation. And, John went into, in a recent article on a video that we did as well on Your Bank is Bankrupt, talking about how all these banks, the cash to deposit ratio is absolutely insane. They almost have nothing covered. It's all just hot air. And that's one of the big issues that we're facing, is that if it came down to it, a run on the bank, when that happens, and it will eventually happen, where are you gonna? You won't be able to get money out. Like, what, are 5 people gonna be able to get money out with a tiny amount of cash they actually have?
Well, according to Deutsche Bank's balance sheet, I think it's almost 20% of people that would be able to get their money out, but the rest would not have it. Now, you got to remember, Deutsche Bank is a terrible bank. Like, it's just in terrible shape. Then you look at other banks here in Canada, they have less than 1%, some of them, cash to deposit. So it's just like a little bit of warning to all the banks around the world that are borrowing out all this credit.
The people in those banks. Yeah.
Well, yeah, it's being a banker is a huge risk currently, and maybe you should look for another place for a job. This is just my opinion, but I think if you're a banker or any financial advisor or whatever, you are going to be in a heck of a trouble because you told everybody how great, for example, these bond investments were. When you're going to start to see this massive debt collapse around the world because nobody's been going to be able to pay that debt that have been created out of thin air, just so on historical proportions, is just beyond any scale. Like we were talk about a hockey stick. Like it looks like if you ran that hockey stick probably from on a historical scale, it would look like you probably end up in the Andromeda galaxy.
Yeah, well, and I think it's important to mention bail-ins are a huge risk as well, especially when we're seeing banks start to fail like this. I mean, they've been failing for a long time, but we're seeing a lot of telltale signs, and they almost insure nothing when it comes to your money, which is in the bank. Mario Draghi, not that long ago, talked about how he wanted to eliminate any insurance on deposits, depositor insurance. So that's a huge issue. There are a lot of signs. That stuff isn't making the mainstream news. We talked about it a bit at WHAM, but of course it's not making the mainstream news. And someone should also warn Donald Trump, whose money is in Deutsche Bank as well. So maybe he should, the same guy who thinks the economy and the markets are the same thing, whenever he talks about the stock market, he's like, see, the economy is great. Anyway, obviously he needs some help with the economic side of things. But it's so important that people are able to take care of themselves, be self-sustainable, financially responsible, and independent. And that's what it really comes down to in the end for all of these reports, is it comes down to you as an individual educating yourself, doing your own due diligence, and then taking action with that which you have learned from this incredibly insane system, and being able to implement your own strategies in order to break free from this. And from my personal opinion, I look at food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Of course, gold, silver, cryptocurrencies like Bitcoin, EOS, Dash, those kind of things. In my opinion, most cryptocurrencies are terrible, but there are some really great cryptocurrencies that are world-changing and world-shaking, and they're the monetary revolution without a shot being fired. So that's really important. John, what's your bottom line?
Well, the bottom line here is Deutsche Bank has been in terrible shape if you look at their share price. We're ever since 2008, they were bankrupt back then. They're bankrupt and they're in worse shape now today that they were. So you just gotta have to prepare yourself, Germany, for a massive bailout scheme or a bail-in. I don't know what their plans are with Deutsche Bank, because it's such a massive bank. It's one of the biggest banks in Europe. And it's think about what toppled in 2008 the whole market. It was Lehman Brothers, just a small little bank. Well, now you have one of the biggest biggest banks in Europe that are on the same verge of collapsing. So this is really dangerous, and think about the ramifications that had. I'm just gonna say, think about a bank that's at least 10 times bigger, probably way bigger than that, is gonna falter. What is gonna happen then?
Yeah, and think of things like Wells Fargo, which is seeing a lot of problems themselves as well, deservedly. So, yeah. But, and again, just finishing it off, the fundamentals are off the table due to the level of manipulation in the markets as well as the monetary system. So you can't put a date on things, but you know it's going to happen, and therefore we have to be prepared. So I'm not saying it's going to happen next week or even next year. It should, and it should have a long time ago. That's a thing. Manipulation pushes things off like this, but the more it's pushed off, the worse it's going to be, and it has to come down.
Yeah. Well, one last thing, don't trust banksters.
No, of course, yeah. The banksters, that's a good way of putting it. Anyway, thanks for going into this with us, John, and until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change. Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube as the ADL comes in and flags all of our content as hate speech. Also, check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also find us at steemit.com at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in Steem, the cryptocurrency. And also find us at the Red Pill Expo, which we have a reference link for below in the description and the comments as well. Hosted by G. Edward Griffin, amazing speakers coming out to speak this year. Don't miss it. It's in Spokane, Washington, June 21st to 23rd. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.